What's happening? JC Agajanian here, broker with the Whissel Realty Group, bringing you our final market update of the year. We are wrapping up 2023, looking forward to 24, and we're just gonna call it like it is. I don't really love all the social media content of agents telling you to sell and buy no matter what the case. It's always a good time. We're gonna keep it real. We're gonna talk about what's happened and what we have to look forward to. So let's dive in. This has been one of the toughest years we've seen probably since the great downturn of 2008. The good thing is we haven't seen values plummet like we did back then. It's been a year marked with regular and regimented increased federal funds rate hikes. It's also been marked by the following of mortgage rate hikes increasing as the Fed funds rate has gone up. And of course, we've got a ton of political headwinds that we have been facing on top of it all. So overall, we've kind of had a bit of a stagnant market. We've seen demand come down, which is the point of all the rate hikes, right? That was deliberate. They wanted to push demand down, but what they didn't anticipate, in my opinion, is also pushing supply down, because so many of the people, especially in the Southern California market that we work in, but in a lot of the country where there's not ample room for new construction, so many of the supply comes from people who are also going to need to buy as well. So the fact that they are turned off from buying an up leg property means they're not going to put their down leg property on the market. So we've just seen an overall drop in both supply and demand and a really quiet market overall. Really interesting too. In our county, we saw about 60% as many transactions take place in 2023 as we did in 2022. Homes are selling at equal or a little bit higher prices than they were. You want to sell your house and buy that bigger home or buy that home in the nicer area. To add onto it a rate that's double or triple than you are used to, it's really stopped people from making any move forward, and there's just no real balance in there. A lot of people are kind of hunkering down and staying put where they're at. So what does this mean to you in your position though, right? So let's say you're a homeowner, potential seller, don't really have to buy. You're in good shape because you know what? Your value has stayed solid. You've probably even gained a little bit of equity over the past year, and you're in a good place because values have stayed steady without any serious motivation or pressure to move. You have the freedom to stay right where you're at and enjoy the home you've got. Now, if you're a buyer, it's a little bit of a tougher scenario because you've got values that haven't taken that huge dip that a lot of people thought was coming. I can't tell you how many people I've spoke to over the past 2 or 3 years, going back even maybe 4 plus, saying, I'm waiting. We've got a 2008 coming again. I know it's going to happen. Home values are going to get slashed in half. That's when I'm going to buy. It's a sad story for those people because it didn't happen. And now values have not fallen in half. They've actually stayed steady and gone up a little bit. On top of that, we've got some higher rates as well. First thing you can do is simply stay put and continue saving, especially if you're in a position where you've done well padding that bank account over the years. Keep doing it and buy soon. Now, the next thing you can do if you're in this position is to adjust your expectations a bit, get into something that you know isn't going to be your dream home, maybe not your forever home, but a great first move to help you earn equity, get on that merry-go-round of real estate so that you can then trade up down the road. And finally, another thing you can do is actually kind of shoehorn yourself into that killer property that you're looking for. Maybe take advantage of a short-term buy down to make the payment a little bit lower for the first year or two and refinance later when the time comes. It's a little bit tougher to do it that way, but it's probably a great move as well. Speaking of refinancing, let's talk about what we think is going to come in the next year. Most people are already talking about the Fed funds rate and whether or not it's going to stay put, go up any further, or start coming down. And the experts in the area are calling for the Fed funds rate to come down in the new year. How many times is the chair going to reduce that Fed funds rate? Totally uncertain. Have no idea. But what I do know is that there's a much higher chance that that's going to come down as opposed to staying put and certainly not going up anymore. So the Fed rate is not a direct correlation to your 30-year fixed mortgage rate, but it does indirectly affect it. We saw mortgage rates peak out in 2023. Just recently, they crested the 8% range, and some quotes we saw even above 8%. But right now, they've already come down quite a bit, and we are seeing people quoted in the low to mid sevens, in some cases even sixes right now. What we anticipate is for that trend to continue. We will probably see at least another point shaved off throughout the course of 2024, setting us up for a lot more desirable situation for both sellers and buyers. If and when we find ourselves in the fives this coming year, as far as the 30-year fixed rate goes, we anticipate a ton more activity. It seems to be a range in which sellers who need to move up or move down or move out of town are willing to do so. And certainly buyers that have seen recent rates as high as 8% are going to be looking at rates in the low sixes, potentially even high fives, and be quite motivated to say, you know what, the time for sitting on the sidelines is over. I'm ready to move in and take some action. So continuing the same thought, if our assumptions are right about the rates, we're probably going to have a similar appreciation year as we did this year as well. Probably low single-digit appreciation, if not a little bit above a flat year in 2024. And if we get something in the 1 to even 7, which is probably too high and something we're not going to see next year, but that 1 to 7% appreciation on the year, quite frankly, it's healthy. It's a good number. It's low compared to what we're used to, but what we're used to is abnormally high. So to recap, we're kind of thinking that we're moving through some of the worst of this correction period right now, and that 2024 is actually going to be a better year, both with transaction count and appreciation and with interest rates all together. Now, we're not going to be screaming out of this market. Things are going to move slowly in a positive direction. But all in all, it's really going to move back to what is exactly happening with you and your family, as opposed to what's happening in the market and how you need to take action quickly. For example, if it's not the right time for you, then you have a little bit of time to play with and figure out when will be. And if you're still on the sidelines, or if you haven't taken action yet, or if you've got a move that you've been putting off, the opportunity may come in the near future. And here's what I'll leave you with. If you've been considering making a move but haven't quite felt comfortable about it yet, my recommendation is to get ahead of the curve, because I think once rates get a lot more attractive, we're going to see a flood of people moving in from the sidelines. We're going to see a lot more people who have been holding off get into the market. And once that happens, there is the chance that we're going to move into that multiple offer scenario with prices going well above asking and a bit of a feeding frenzy again, except at this point at a little bit of a higher rate pop than we saw before. So if you agree with me and you think that that is coming in the near future, you're going to be better off taking action before that, so that when rates do come down to that nice, comfortable level, it's just a refinance for you instead of time to jump into the market and compete with everyone else. Whatever scenario you find yourself in, make sure you are talking to somebody with your best interest at heart, instead of one of these agents that's saying it's always a great time to sell or buy, no matter what the case may be. Spoiler alert, they might just be after the commission.